This is the Mosaic company. The price has dropped down far enough for us to analyze this company to determine whether or not we're going to buy more or cut our losses. This is their website. You can see a pretty picture of corn. Their motto is we help the world grow the food it needs. That is their mission, their motto. They are a potash and phosphate company. They are one of the largest in the world, if not the largest in the United States. They provide the fertilizer that farmers need. And because they are such a large company, there's a very good chance that if you need fertilizer, you probably have to deal with this company at some point. Um, what I want to do is just go through kind of where we got the numbers from and what our analysis looks like. So, real quick, I wanna give kudos, a shout out to this company for breaking out their other assets. Many times in these financials, you'll see other assets or other liabilities, and many times those numbers are not described, defined, or broken out, and you're left with just wondering what these other assets are. Many times, I will simply not include those, quote unquote, other assets in my calculations because I don't want to um, calculate or analyze based on, just a random number, right? I like to know what's in the other assets. So again, it's really great that those are broken out for us, and that's what you see here. Um, let's go back up. All right. So this is the June 30, 2025 balance sheet. This is the most recent quarterly earnings report. Just want to quickly show goodwill. I do not include goodwill in my analyses unless the goodwill is a substantial part of the business. In this case, it is not. This is, again, a basic materials company. And so while they may have a brand name, I don't think it's worth too much because, like I said, you kind of have to do business with them. You're not necessarily buying Mosaic fertilizer, you're just buying fertilizer, right? The other thing that I wanted to point out really quickly was their partnership in Maandan. See if I can find that real quick. This is a company. Here we go. This is a company that they had some interest in, and then that company was sold then to a Saudi Arabia company, which is also owned by um, the prince or the government of Saudi Arabia, basically. So Abu Dhabi, okay, the Kingdom of Saudi Arabia basically owns this company because Mosaic was involved with this company before it was sold. They still retain shares in this company. Okay, this is a phosphate company over in Saudi Arabia, and again, one of the largest, if not the largest, fertilizer producer in Saudi Arabia. There's also some aluminum and some other things that they're also mining there. So anyway, so it's a really great investment, I think. And because it is owned by the Kingdom of Saudi Arabia, and because those shares are sold and traded on the Saudi Arabia stock exchange, I can assume, without knowing much about the Saudi Arabia stock exchange, that the price is going to at least be stable, right? The stock price, I don't think is going to have a lot of volatility, being that it is primarily owned by the government. All right, so that's that. Let's dive into the numbers just real quick. Um, what you'll see here is everything that is highlighted in pink is straight up predictive value based on 2026. Okay. Now, where I got those numbers from were the numbers from 2022 going forward to 2025. Okay. And so these are simple averages as well as a one standard deviation to come up with a possible predicted value for the year 2026. One thing that I want to point out just real quick is the buildings. The number was really wonky. Sometimes the math is not always great. You can see here that it has moved around quite a bit, but when you do the math on the statistics, you don't wind up with much of an option here. So 13.5, sorry. 13, yeah, 5 basically. So the same number. And this is from 13.95. We know that on average, it actually increases by 3% every year. And this is property, plants, and this sort of thing. And so you know, the only option I had was to increase it much higher. If I play around with that, I think it'll make a big difference. But either way, I think what's was really important here is that their assets are large. And again, this is not considering the goodwill, right? So if we added goodwill, it'd be even higher. But roughly 20,000. And then if we look at the liabilities, they're hovering at right about 12,000, right? And so that means that they have a net book value every single year, which is really good because that's what you want, meaning that this company is very, 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 very far from being bankrupt. Very far. They have lots of assets that they can sell off. Matter of fact, I think that is one of their issues is that they have so many assets around the world that it causes problems. Like right now, there is a news story about some plant in some country that they're having a problem with, and I think that's why the stock price has taken a fall here uh, lately. And again, that's just the risk you take for being a large global company. But again, like I said, when you look at the straight up numbers, and this is no funny business here, right? Unless they're just blatantly lying about these numbers, very, very far from being bankrupt. So I like to see that. However, we see on average the balance sheet falls by 1% a year on average, and you can kind of go back and see where this comes from. Oh wait, no, there we go. Then this one is also. There we go. All right. So it increases. So again, really good looking numbers. Um, the other thing to point out here is that this number is not predicted. It is calculated. And what I mean by that is that this number is calculated simply by subtracting the predicted value of the assets minus the predicted value of the liabilities. And what I'm looking at is does this number fall in line with what the average increase is per year? So we see that right now, again, this is as of June 30, that the net book value is 11,478. On average, it increases 7% a year. So a growing balance sheet, really good, right? And then predicting out to 2026 of 11,808 based on the numbers here. Now, what you see here in blue are statistical possibilities. Okay. And there's statistical possibilities, again, based on simple averages and one standard deviation, which is a simple statistical calculation. Okay, so again, nothing complicated, but legitimate statistics, right? Okay, so 7% from this 11,478 is probably more around 11,800 without doing any math here, just kind of roughly looking at it, 11,800, maybe 12,400. And so the calculated values I have here is 11,808. which is close enough. So I don't think that that's far off. All right. Book per share. Again, this is predicted value for 2026. Currently, right now, the price to book. Oh, I'm sorry. The book share, which is taking the net value of the balance sheet. So total assets minus total liabilities divided by the number of shares tells you if the company were to sell everything today, what is the share price worth? And it's worth $36.18. Currently, Mosaic is trading under book value. That is um, one or two things, which is why I love the stock market. Either it is a great thing, it's a buying opportunity because that means that right now the share price is really cheap and you can buy it low and sell it high later, right? Or it means that there is something wrong with this company, meaning that there will soon be some change in these numbers that's going to cause this net value in the balance sheet to fall below where it is now. Okay. Now, what's interesting is historically, that isn't so. Okay. Historically, that has not happened, right? It happened one time back in 2024. Okay. But right now it's way up. Um, and so, 3 years is what I usually use for these analyses. You can go back, 7, 8, 9. Matter of fact, I don't invest in anything if it hasn't been in business and doesn't have financials for at least 10 years. So that if I really needed to, I can go back and look at 10 years worth of numbers to get an idea. But 3 years is what I use for these analyses, and it's worked out well for now. So anyway, the price to book is the price divided by the number of shares. Okay. And so whenever the share price is below the actual book price, then you're going to have a price to book that is less than one. Okay. A price to book of one means that the share price is exactly what the net value book price is. All right. Now, what you're seeing here, this 0.62, this is based on the lowest price that this stock has been in the year of 2025. Okay, now I don't know what that number is, but that number based on this book share price is 0.62. Okay. The highest share price that this company has been in the year 2025 had a price to book of 1.06, which is just over the book value. And then if you go back to 2024, you see that the low was 0.71, the highest 1.2. 1.12, sorry. 2023, 0.90, got up as high as 1.65. And then in 2022, it was 1.3. It got all the way up to almost 3. Now, what these numbers mean is that this is how popular basically the stock is, right? When people are very excited about this company, they think that the company is going to make a lot of money. They think that the share price is going to increase in the future, then typically the share price will go higher because people are buying it, right? But the actual value of the balance sheet will stay the same. And that is what causes the price to book to go higher. Okay. Now, again, we're only looking at the last 3 years. But if I were to tell you that if the price to book got all the way up to 2.8, it'll be the highest price to book in the last 3 years. Okay. Now, personally, what I'm looking at is a predicted value of 0.78, a net value book price of $38. And again, this is predicted value for 2026. All right. And if you look statistically at what this net value book per share price can be, okay, and what the predicted price to book or statistically possible price to book can be, that is how we come up with what our predicted share price can possibly be. Okay. And as you can see, our options here, right? We got 0.47, 0.88, 1.66, 1.58. Okay. does not seem out of the realm of possibility. What's interesting here is that what we don't see is anything in the neighborhood of 2 point anything. Okay. And that is because for the last 3 years, the price to book has been around one or one something. Okay. That has been its range, right? So to think that the price to book is going to all of a sudden climb to 1.66 but between now and next year is not impossible, right? It's been there before, right? Matter of fact, if it goes back there, it won't even be the highest it's been in the last 3 years. Okay. But the question becomes, is that possible? And what has to happen here with the balance sheet for that to be possible? Okay. And this is why it's cool. You can come in here, you can play around with these numbers and try to figure out, what can possibly happen to get us back to that 1.66 other than just pure speculation, right? Not going to do that today. What I'm looking at here is just a conservative estimate. All right. Now, the minimum price for 2026, um, what I have it here is at 0.62. And the reason why is because while 0.47 is possible, it is possible. I find it difficult to believe that it gets there. Um, it is possible though, especially when you think about the fact that for the last 3 years, it has the price to book has slowly declined. 1.3, zero point 0.9, zero point 0.7, zero point 0.6, 0.47 is not out of a realm of possibility. But for me, um, that's not like such a huge deal. That just tells me how low the price can go. Let's put it there and see. So $18. Price can get down to $18. All right. Now, the max, the highest the price can go based on these predicted or statistically possible price to books is what I'm more interested in, right? And so what I have it at is 0.88. Now, if we look at this 1.66, which is statistically possible, but hard to imagine from here. That doubles the share price to 62.98. So again, statistically possible, but I'm going to say highly unlikely at this point, right? So conservatively, I think that the share price continues to struggle a bit. I don't know what brings it out of this these issues that it's in right now. But I think the share price continues to struggle a little bit. But that 33.63 still puts us 10% higher from where we are now. So that tells me that while the next year doesn't look great, there is still upside even from where we are. And so, um, and especially looking at, how much we're buying the stock for now, how much we bought it for in the past, I think that we can still make a profit at $33 if and when it gets there. The other thing I want to take a quick look at are the dividends. And so what I've done here is this is the dividends for 2022. These are dividends that the company pays. Also, for context, I want to say that I do not invest in any companies that don't pay a dividend of at least 2%, and they have to have paid that dividend for 10 years without stopping, meaning they can't have any breaks. They can increase the dividend, they can decrease the dividend, but they have to pay a consistent dividend for 10 years. Okay. So the reason for that is because the likelihood of them all of a sudden pausing dividend payments or not paying dividends is highly unlikely, right? Doesn't mean that it can't happen, but it's highly unlikely. And so anyway, 2022, 50 cents, big jump. And this jump in the dividend um, makes a lot of sense when you go back and you look at um, the exuberation for this particular stock. Um, when they were paying this dividend. Typically, what happens is you have investors like myself that can only invest in companies that are paying at least 2%, right? And so as the share price rises, the dividend yield decreases, right? And so in true dividend stock fashion, the board of directors decided, hey, our stock price has gotten so high that we need to raise our dividend so it remains competitive with all the other dividend stocks out there. And so that's why we see this big jump to zero point 0.8 in 2023. And then we see a steady increase to where it is now, 0.88. And so I think it's going to continually increase. Now, the average increase is 17%. I don't know if we'll get all the way to 17%. Maybe we'll see like 5%. But that puts it at $1.03. Even still, what I've done here is I've taken the total amount of dividends paid, like the total cash, just the dividend multiplied by the number of shares, and then I divide that by the net income. All right, the net income is literally the profit that the company makes. And the company is paying all their dividends in 2025 with only 14% of their net profit. In 2024, they had a net loss. Okay, they actually lost money that year, and so that's why you see a negative here. Um, and then 2023, only 19% was used to pay the dividend. And then in 2022, only 6% was used to pay the dividend. So I expect the dividend to increase. And so what that means is even if we hold this stock for another year, right, we're going to get paid a dividend, an increasing dividend to wait, and we can be almost 100% certain that we are going to see a share price 10% higher than where it is now. And we also know that our floor, statistical possibility, the share price will not go any lower than 18. Now, we're going to buy another 25 shares, and that'll bring us to a three-fourths of a full position. If the share price drops again another 10%, I may, well, not may, but I will definitely have to do another analysis. Hopefully, we'll have another quarter of numbers by then. Matter of fact, I'm certain we will. I don't expect the share price to fall another 10% between now and, December. But either way, I'll do another analysis and then I will definitely be looking at this minimum, right? Because at that point, once we reach a full position, buying anything more than that will need a really increased scrutiny on that purchase. And then I will definitely be looking at the minimum because then I'll want to try to purchase at the minimum, right? I want to purchase at that $18 level versus wherever it happens to be. So anyway, that's that. If there's any questions, please reach out. More than happy to discuss this stuff.